This is the Mooncast.
Yeah, dude, man, just want to start out first with like, how are you doing? How are you feeling? How do you feel about the state of the market, man?
I think we're in a sideways motion. To be fair, I don't think. I think kind of we've had the worst of it.
Yeah,
Yeah, I think we're on a sideways motion for now. So I think we're going to continue for some time. It's just going to be hovering up and down until the next run up. But I mean,
yeah,
that can happen anytime, really.
yeah. Do you think it's possible that we could go? I mean, anything's possible. What do you think the likelihood is that we go below 20K again before the next halving?
I think it's likely.
Yeah. Yeah, I think so too. I think people are getting hyped now, but I think the Fed is going to be sturdy because, we'll see what happens. The CPI report, I think, is supposed to come out today, if I'm not mistaken, but we'll see what happens when the new CPI report comes out, because that will determine like what they're going to do. If it comes out not too good, higher than expected, then of course they're going to continue the 25 basis points rate hike. And that's just kind of how I'm looking at it. And I think the market is trying to price in that they're going to freeze or halt rate hikes, but I think they're very adamant about protecting the dollar as much as possible, because if they reverse, or if they freeze now, they can only freeze and keep the rate hikes this high for a minimal amount of time. I say at max the end of this year, because you see the banks are already starting to crumble now, and it's crazy, So I think if they can't keep this high this high interest rate environment for too long, because over the course of time, the more banks are going to start cracking. Then there's going to be a run on the regional banks, and then the top 4 or 5 major banks will be all have all the liquidity. It'll be consolidated with all the liquidity, which is maybe what they want to do. As they're steadily rolling out the CBDC. As you know, I don't know if you know, but Fed now is dropping in July, so that's going to be fascinating to see how that goes.
I mean, the thing is, historically speaking, the interest rates now are quite low. So, like 20 years ago, you would have like 16 or 15%. No, I mean 20 years ago it's about 7%. But if you look like 40 years ago, it was 16% interest. So, I mean, now you can probably get a fixed mortgage for say 4.5% or 4%. So saying that, I mean, I think the problem is they can't really put interest rates any lower. That's the thing.
Yeah.
They can't. So what they're going to choose to do is just print money instead.
Yeah, this is the thing. I think because back then the bubble wasn't as big as it is now, because everyone is over leveraged with credit. Everyone, from consumers to businesses to banks, everyone. So, the problem got way larger than it was in the past. So I think for them to be able to increase the interest rates that high is impossible, because everyone will get squeezed. I mean, you see the businesses are already starting to fire people right now. They're already starting, mass layoffs.
Obviously with AI, they're just going to replace people, replace the labor for like artificial intelligence where they can.
For sure.
But I mean, on the end of the day, I mean, I spoke to my friend about this yesterday, and there was an interesting video where somebody said that basically, if you don't need people, you get rid of them. But in reality, what you should be doing is scaling your business up so you keep the people on. So instead of selling, say, one thing, you sell more things and you keep the people on, increase the trade. But the problem is companies like Twitter, they have the monopoly. So I mean, they don't really have any competition from that point on.
I totally agree with you. Yeah, I think that it's good to diversify, especially from the business aspect, depending on what kind of business you have, but diversification, I think, is key in this type of, high interest rate environment. But I would say that at the end of the day, when businesses have to get squeezed and they do have to cut expense, it will trickle down to the employee, right? At the end of the day, the employee loses, and it just makes everything worse, because then you have all these mass layoffs, then you have less purchasing power within the entire economy, and you know how that game goes. Then the businesses are going to lose money over the course of time, anyways, right? Because there's going to be mass layoffs, less people with money, less spending power within the economy.
I mean, it's a vicious circle, really.
Yeah.
That's a problem you're having. So, I mean, from what I can see, is they can't really reduce interest rates much lower, because if they do, then it's just going to become easy borrowing again.
Mm-hmm.
And what they want to do, effectively, it all boils down to the COVID loan. So they borrowed this much money off during the pandemic, and they're going to have to pay that off somehow. They can't really pay it off because it's too much what they borrowed. And this is where it boils down to. So interest rates went up to kind of pay that loan off. But to be honest with you, if they go back down, which I don't know, I don't know, they probably, it's a hard one to call. I mean, on the end of the day, your property prices aren't going to be going up. That's the certainty.
Yeah. How are the property prices looking now in England? Is it stagnating? Are you been looking at it?
It's pretty flat.
Okay, that's what I assumed. Yeah, that's what I assumed, because if I'm looking at it, because people they're not gonna lower the prices really for their property, because they know eventually the Fed is gonna have to pivot. I'm guessing they're seeing the warning signs with the banks and the banking crisis that's going on right now. So yeah.
I mean, the way it happens is, if somebody wants to sell and they need to sell, they're going to have to sell it below market value.
Yeah. Yeah. But I mean, how much below market value though? We're talking maybe what, like 5% below market value right now?
Anywhere between 5 and 10%. So what I'm seeing, the thing is, you have just like with crypto, you have large cap coins and small cap coins.
Yeah.
In the UK, you have, just like in America, I'm guessing, you have large cap regions and small cap regions. So, for instance, when everything does eventually kind of fall, the biggest affected will be London. Smaller places won't be as affected, but the biggest drop is these big cities. So, if London drops 30%, that's a huge amount, But if London drops 30%, then where I am isn't going to drop 30%. It might drop 10%.
Yeah. Why? What's the reasoning behind that, though? Would you say?
Well, because the thing is, I mean, places like London, the property is not really based on the people who live there. It's based on foreign investors, so like Russians. So they come, they buy a house. Nobody in London can afford to buy a house. I mean, that's just crazy. But for where we live, in the Northwest, if you were to stay at home for 3 to 4 years, you could afford to put a deposit for a house. And this is kind of the difference we're having. So in London, you could never afford to put a deposit for a house. It's just impossible.
Yeah.
It's not humanly possible. If a house is worth $1 million, where are you going to find 100 to 200,000 to put a deposit for a house?
Yeah. And it's not even houses that are worth $1 million there, right? It's more like the apartment, like 70, 60 square meter places, like in the city center, right?
If my house was in London, it would be worth roughly 3 million. Where I'm staying, I think the house is probably worth about maybe 300 to 400,000. So you're looking at a 10x.
That's unreal, man. That's unreal. It's like, okay, where do they go from here? This is the thing, man, about this. So here's my issue with this whole situation, right? The fiat system, right? So essentially what they're doing, or what they've been doing, is squeezing the middle class, right? Because the middle class don't know anything about financial literacy, right? So they don't know when they print money that they're supposed to buy assets, and those assets go up in value, right? In valuation. And so eventually what's going to happen is, the millennials, the Zoomers, are going to be completely priced out in about 10, 15, 20 years, right? Completely. Like, there's no chance. I think in most major areas around the world, even the more middle income areas, are going to be priced out because the prices are just going to keep going up because they're going to have to start printing again, and every time they print, the asset appreciation is crazy, right?
I mean, if England's different to America, so here, if there's a train system that like connects one of these smaller regions, and it goes straight into London, you'll see an area where they have that that transportation go up. Do you know? So if for instance they build a super train and it travels to London in 30 minutes, that area that the super train is traveling from and to, people from London would commute there. Do you get it?
Yes.
So the
Yes.
house,
Yes.
So the house price will just shoot up
from that in between area, right?
Yeah. So you're seeing a lot of that happening. But the problem is, where do you take it from there? And now the thing is, people aren't even commuting into London anymore. They're just working from home. So I've got somebody in my area. He earns 120,000 a year working in London, but he only goes to London maybe twice a month. And you see more and more of that, where people have home offices and people work from home rather than actually go into the office or go into a job. They just do it from home. So you see more and more of that. But where it's going to end, I don't know. I know, firstly, that property prices in London are way overvalued. Because what you really need to do is you need to get somebody's income, and you need to times it by. I mean, a healthy figure would be no more than 10 to be worth the property price of that area. So in London, an average house is like 1.3 or 1.4 million. So how many people do you know after tax that earn 140 to 150,000 a year in London? And the answer is not many.
Yeah.
So, how is that going to sustain?
Exactly. And the thing is, again, a lot of people aren't financial literate. So even if they know to save money and they're not moving that into assets periodically as they're saving the money, then they're not going to be able to outpace the rate of inflation, right? So even if you're earning that $120,000 after tax, then let's say the cost of living is pretty high, whatever, after expenses. Let's say you're able to save 20, 30 grand a year, but then the inflation is going at a rapid pace. I think what is the inflation in London right now? It's 10%?
Like 10.4% in the UK.
Sheesh, man, and it's compounding. That's the crazy thing about it that people don't understand. It compounds.
Yeah, year after year it compounds.
Yeah.
So I did a calculation since 2000. I think it was 2017. I added £550, and in today's value, the same purchasing power, you'd need 670.
Ridiculous, man. And that's just from 2017, right?
Yes, that's 2017. So if you were to do the course of like 10 or 20 years, because the thing is, people don't realize the significant effect of compounding interest.
Yes.
It's not just 1 year. It's kind of 1 year, then another year based on the previous year, and it just compounds from that point on.
Yes.
And this is what people don't realize.
Yeah, exactly. No, yeah, I totally agree with you too as well. I also wanted to talk to you too about the US, the banks, as I told you, I think before, we recorded the podcast, but the banks lost money on mortgages they financed for the first time in history, right? And this article that I'm reading now is from Watch Guru. So it says that new data obtained by the Mortgage Bankers Association has revealed that the U.S. banks have lost money for mortgages they financed for the first time in history. Moreover, both independent mortgage banks and mortgage subsidiaries of chartered banks lost an average of $301 per loan. Crazy. And it also says the data notes the first profit loss on record since report's inception in 2008. Additionally, the report states that the losses averaged 13 basis points and were brought by a combination of rising mortgage rates in a short time, low housing inventory, and challenges in affordability. Wow, that's crazy, man. What do you think?
I mean, ultimately, I'm not surprised really that happened. Um, I, the problem is that the game they're playing is it's all their fault, really. All this is down to them. It's down to the banks.
Yeah,
And I've spoken to a lot of people about this, but I mean, if you think about it, say a house is worth 800,000 or £1 million or $1 million, whatever it is.
yeah.
If there wasn't the mechanism to have a mortgage in place, how much would it actually be worth?
Exactly. This is my thesis too as well when it comes to cryptocurrency, right? Because I'm looking at it if the value, because I see, for instance, Bitcoin as a value extractor, right? It's a value extracting and value preservation tool, right? And as more and more liquidity and value gets funneled into satoshis over the course of time, and then people start valuing, because the concept of value and a medium of exchange tool, because if you look at it, right, from the, let me backtrack, right? So if you look at it, I don't want money, right? What I actually want is the good and the service that money, exchanges for. I don't want the actual money. So if you can switch that tooling to something that's more hard and something that can't be changed, a monetary policy that can be changed, then it can help to stop robbing people of their value over the course of time. So my thing is, as the value starts getting more and more extracted into this monetary vehicle, Bitcoin, I think over the course of time, the property prices will go down, because
Yeah,
they're
yeah,
going to be, it's gonna trade against Bitcoin, right? And Bitcoin's
yeah,
values
definitely.
is going up, and the assets, I think the value will eventually go down. There's going to be a bubble, and it's going to go down when in trading against Bitcoin, right? And
I
that's what I
mean,
see.
on the end of the day, there's only so much money in the world, really. And what's going to happen is people historically they never used to buy property to hedge inflation. Nobody ever did that. But then when it became a thing, everybody did that, and everybody rushed into it.
Hmm.
And that's what created this inflated situation we're in. So I think once cryptocurrency gets to a point uh, where like pensions are getting involved and different tools are being used for people to invest in. Like for instance, I don't know, have you heard of Nutmeg and Moneybox and all these like auto investing tools?
Hmm. Yeah, I know
So
about auto investing tools, but I don't know about those specific brands. But yeah.
I mean, there's quite a few of them. There's quite a few, and what they do is they do like a stocks and shares for your money.
Hmm.
So they have like basically they invest it for you, so you don't have to think about it. Once those tools allow for crypto to be in place, where they can allocate some of the funds to, for instance, buying Bitcoin or buying Ethereum on a monthly basis, that's where you're going to see people on their own just literally just coming in and buying it just to hedge inflation. Now, I don't think we're seeing normies buying crypto to hedge inflation.
Yeah.
And but once that happens, I think that's going to be the biggest boom. Um, I don't
Yeah.
know when it's going to happen. My inclination on that will be like 2030, somewhere around there.
I actually, I mean, it's already, you see Fidelity and BlackRock are already starting to get into the game. So I don't think we're that far off. I mean, it's just they're going through the legalities of everything, and because the government obviously doesn't want it to happen until they want it to happen, right? But Fidelity and BlackRock and also Bank of America, they just tweeted now recently that they want to start offering cold storage services, right, for their clients, right? The problem I have with this though is the entire point of cryptocurrency is the self-sovereignty aspect of it, right? So when you're leasing that control to a custodian, for me it's kind of the same kind of game that we had previously, and we don't now they can manipulate the prices of things again, like they do with gold, because of the derivatives markets and so on. When you don't even know. The thing is, if they were serious about being custodian and actually really taking this serious, then why don't they put their address and make it public so people can see it on chain?
Listen, I mean, the big boys are not going to give up their guns, are they? They're just not. So
Yeah.
they currently have the entire market as it is. The only thing they can do is integrate this technology within their platform and make it cheaper for them to run. That's kind of the future where it's heading. I don't see them actually giving anybody private keys or giving anybody wallet addresses and stuff. I see it. I don't know where I see it, but I see people will just be using blockchain technology within their banking apps. Transactions will happen on chain, but whether you'll ever be able to see your address or not, I don't know.
Yeah, because it kind of removes the entire, because the whole point, is self-sovereignty. So for me, I think the problem in the market right now is education. And this is what I like about El Salvador, right? Because they have these Bitcoin schools and academies that people can attend and learn, get educated on self-custody, get educated on the entire necessary elements of understanding blockchain analysis, understanding how to the private key aspect, understanding the monetary policy, understanding the entire purpose and of the technology, right? So this is what I think is missing, is the education portion. And I don't think people want to get educated. I think people just, they don't care enough. A lot of people don't even know, they don't get the purpose, because if you're in the West, you don't really understand the importance of this technology, right? But if you're somewhere where there's currency instability, you have hyperinflation, like if you're looking at like a Zimbabwe, a Venezuela, these type of areas, where there's hyperinflation going on, you don't really understand. If you don't have to deal with remittance payments, if you like living in a Western country, but your grandma is in Iran, where they're sanctioned, if they're in Russia, where they're sanctioned,
Yeah,
yeah,
that's it.
people don't really understand this. That's the problem, I think. I think the West is going to be very slow in adaptation of this technology, whereas the more developing nations, the areas that need it more, like you see, these nations, I think, are going to be more forward thinking and have an advantage, in terms of adoption, in the adoption curve.
I, I mean, obviously America's going to lead the way here. That's kind of what's going to happen.
You think
Once
so?
America, yeah, I either the UK or America. I think the UK is probably going to start the show, and then America's just going to jump on. We need to remember that USDC is one of the biggest market cap coins, stable coins, like
Yeah, you're right.
so that's not going to go away, is it? And then obviously you've got USDT, but I mean USDC is the main one, I think.
Hmm.
But I think that the laws set in place for the UK are much stronger than America, and the stance it takes. You see, what happens is the UK sets the laws, Europe copies them, right?
Hmm.
And then somewhere in the middle, before Europe copies them, America comes in and takes it as well. So America's very good at making business out of anything. Okay,
Yeah.
you look at the internet. It was kind of mainly it was all pushed from the UK, but you look at the likes of Google, you look at the likes of Amazon, you look at the likes of Yahoo. They're all American based. Okay,
Hmm.
if you look at most inventions, most of them were either formed in the UK or in Europe, but the Americans were always the first to make it into a business.
Yeah, yeah, I would say so too. But the problem is when you're looking at the legal framework that's presently constructed in America, and also how they're handling the entire situation in
Yeah,
regards
they
to
handle it badly.
Yes, exactly. And you have companies leaving now. You have companies that are starting to make subsidiaries in other countries. They're like, okay, fine, we'll just leave. We don't care anymore about the U.S. And I kind of told people this was going to happen, because when you have these friendly business environments, when you're looking at a Dubai, you're looking at now like in El Salvador, you're looking at a Singapore, when you have these areas that are more friendly for entrepreneurs and have very clear cut laws already in place and legal framework, then why go through the headache of doing it in the US when you can just do it somewhere else? And then when the US figures it out, you can open a subsidiary in the US and then go from there. But by that time, they'll be behind on the adoption curve. That's the
I
thing.
mean, isn't that what's happening with businesses in the UK, where all these offshore companies are set up in God knows where, like Costa and Starbucks, where they don't pay any tax in the UK, and
Yeah.
then they're just opening subsidiaries in the UK, and then they're operating. So that's somewhat what's happening in the real world as it is.
Yeah.
It's like your small coffee shop pays more tax than multinational Costa, because they have an offshore company based in, British Virgin Islands, and
Hmm.
they have their main meetings on the British Virgin Islands, and they class it as an offshore company. So
Yeah.
I don't think that's going to change anytime soon. And um, but I don't like that model at all. I think it's wrong personally.
Yeah, I mean, the thing is, the rule books are put in place, so people can, people who understand the rules, they have the advantage, right? So even if they change the rules slightly, the people who understand those rules that are being changed slightly will always have the advantage. But when I'm looking at it from the outside looking in at the U.S., right, you see that they're trying to ban TikTok now, and you see what's going on right now, in regards to them. They're trying to increase taxes. The thing is, look, increasing taxes or increasing the entire the labor force in the IRS is not going to help anything, right? Because you got to think the rich people have the best lawyers. They have an army of lawyers that are more equipped with more experience than some Joe Schmo that just got hired from the IRS and just learned after 6 months about taxes, right? Then you have the issue of them increasing the taxes, which isn't going to help anything because, again, the rich people don't pay taxes because they understand the rules. They know that you can write off taxes on from your real estate properties that you own. You can write off the credit that you borrow. You can open up trust. They understand this game. You can open up nonprofits. You can write off a lot of stuff as business expenses, right? They understand the game,
I
and
mean,
so yeah,
the whole point of taxes is to kind of keep the system going. But the problem is, if you have the very rich that if rules are developed for the very rich to not keep the system going, then it's wrong in a way. I mean, yeah, to be honest with you, if you're not going to take money from the rich, who are you going to take it from?
yeah, but the problem is a zero sum game because it's like, okay, even if they were to change the rule book to like force the rich so they didn't have all these different favorable tax situations, well, it would cause a lot of problems, right, in the long term. Because these things is it's not a push a button and then fix all, because economies are like the anatomy, right? They're like the human anatomy. Something breaks or something gets fixed and then something else messes up. So when you're looking at it, if you force the rich people to pay more in tax, well, that means they decrease their profit margin, right? And if you're decreasing their profit margin, well, then they're going to find a way to make up for that difference, either by increasing the prices for their good or service, or by laying off people, right? And if they either way that they choose, one way causes more inflation, and the other way is going to cause a ripple effect where less people have jobs or have less spending power, and then they have less to purchase for other businesses, right? And then that causes a whole entire ripple effect throughout the economy. So I think they make the laws in that way to favor rich people because these laws are completely legal, like the tax avoidance laws or tax optimization laws that they have in place. But it's to also keep things sustainable, because the more that the rich people don't take advantage of these things, the less money they have, and they can't expand the business, they can't grow and hire more people, so more people have more income. So it's really not a okay, tax the rich and this solves it, or increase it. It's so much more multi-dimensional and more complex than that, in my opinion. But what do you think? I don't know.
I mean, from the one angle, I do agree with you that obviously the rich need to keep innovating and keep investing in the company. Uh, but the problem is, you know, okay, they give. The problem is when you have a system set up where they can just register offshore companies, or they when you live in a country. This is my take. When you live in a country, um, you shouldn't be able to take money from that country, um, and not pay the tax. That's my notion on it. So when people, for instance, when these companies sell like Costa and Starbucks, and they're taking money from the people, and they're not paying any corporation tax because it's filtered through some secondary company, based in an offshore company, based in an offshore country, that shouldn't be able to happen because there's no money being generated in the offshore country. You understand what I mean?
Yes. But what if that business is hiring more and more people and expanding, right? So they're helping your economy indirectly, right? Because more people have more purchasing power because they have more jobs available for people. And so that
Okay,
decreases the
so
unemployment rate.
why don't they just reduce the tax within the country so people can do that? Like, okay, let me put this in a simple form.
Yeah.
I live in your house, okay?
Yeah.
I eat your food, but I pay nothing to you or your house. Instead, I'm paying it in another house because I've decided to fund the other house, but I'm not funding the house that I live in. The money's coming from the UK, it's coming from Germany or from wherever it is by
Yes.
the people of that country because of the innovation of that country. But what these companies are doing is they're setting up base uh, in a country with no innovation, just simply tax avoidance rules. So they're not paying anything or paying very little to that country, and I think it's just wrong, because when you have like a sophisticated country where you have the laws set in place for innovation to happen, and then what you're doing is saying, right, well, we'll take all that innovation, right, we'll make money in this country, but instead of paying tax in that country, we'll just now register it in an offshore country like Cayman Islands or whatever. But this country that they're registering the company to has absolutely no innovation.
Yes, I get what you're saying, but the thing is, how I look at it is like this, man, because I'm getting what you're saying, but for instance, if you look at the zero tax countries, right? If you look at, for instance, like a Dubai, right? Um, it works only because the government is able to subsidize the public goods and services from the oil that they control, right? So they control the oil companies and they're able to subsidize some of the public goods and services, but the people are generally speaking more on their own, as you've explained it to me too before. Like if you're not Emirati, then you don't get certain privileges as someone who was born there and so on and so forth, and they don't really help to subsidize people's lifestyles from like public
So
goods and
so hold on.
services,
So
right?
let me get this straight. So in America, in Europe, in the
Yeah.
UK, when you're born in a country, you're a citizen, a full citizen of that country. So they're not going to turn around and say, hey, because you were black and you were born in America, you don't belong in America. I mean, they can't do that. And
Yeah.
in the UK, whether you're black or whether you're Jewish and you're born in the UK, you're given like proper citizenship just like any other person.
Yeah.
Dubai has its own rule sets that says we don't follow this rule, and yet again, companies are allowed to register an offshore company into Dubai and take money from the UK and pay no tax in the UK. Instead, pay whatever they're going to pay into Dubai.
Mhm.
Do you get what I'm saying?
Yeah. Yeah, I get what you're saying, but yeah, it's a little bit of a tricky situation, man. But yeah, I get what you're saying. But I'm saying that even though they're making the money from the UK and they're moving it to Dubai and they're not paying taxes from the UK, they're still um, providing jobs, for people, So yes, it's bad what they're doing, but they're also doing good, too as well. Because say, for instance, if you were to force this company to pay tax, maybe the company can't operate in that same way, or they can't expand anymore, or they have to increase the prices for their goods and services now because they have to add it on an expense of 30, 40, 50% tax or whatever the tax rate is in the UK. You understand what I mean? So
I completely understand what you mean. It's just
yeah.
if there needed to be favorable taxes for the rich, then they should be able to be done within the country rather than companies seeking to go offshore.
So what you're saying is the UK should lower the taxes to entice entrepreneurs to not have offshore companies in Dubai and stuff like that, basically.
I mean, if I was in charge, I wouldn't permit offshore companies to operate in any country. Just the whole notion is just flawed.
Yeah.
I think if you're, yeah, I just can't see that working out. I mean, I don't know how that works out. I mean, you just literally avoid corporation tax completely.
Yeah. No, yeah. I totally understand you from that perspective. But I'm like, okay, so if they say, for instance, in this hypothetical scenario and they stayed in UK, would be the tax rates for them? It's progressive, I'm assuming, right? So it'd be what, let's say, estimated 20-30% tax. So that's now
Well,
eating into their profit margin.
well, I think it's 20% now. It's going up to 25%. So what you would do is you probably just lower the corporation tax based on the people they hire and the innovation they bring to the table. I
Yeah.
don't know. I mean, I'm not an accountant, but
Yeah, of course, of course. But my thing is, okay, you lower the corporation tax. Well, again, it's not like pushing a button, because then now the government has less income, because the only two ways the government makes money is either they borrow it or they get it from taxes, right? Or those are the only two ways. And in the States, they can just make money out of thin air and print it because of the global reserve currency. And so if you're lowering the taxes to, let's say, a 10% from a 20-25% basis on the corporation tax, then where's that difference coming from? It's going to have to come from somewhere else, right? You're going to have to increase it somewhere else, either from the progressive tax for regular day-to-day middle-class citizens, or, well, you're going to have some kind of tax clause somewhere, because you're losing money as a company or as a country to keep companies there in-house. And that's the thing. Otherwise, they have to print the money or borrow the money, which is, essentially causing more issues, because then you increase the debt ceiling. And when the debt ceiling gets increased, then you're paying more for the interest rates. And then eventually you get to a point where you get squeezed as a country, which is where the States is at now. And the States is at a deficit. They operate a deficit every year. So we don't produce more than we spend. And so we have a deficit because, you have the Medicaid, Medicare, and the Social Security that's mandatory to pay, right? And after you take that expense plus the interest rates on the bonds, right? So they're paying the interest rates on the bonds on top, and you add those two together, with all the other miscellaneous expenses as well, roads and yada yada. When you add all those expenses together, there's a deficit, right? I've done the calculations. A deficit of around $400 to $500 billion as of today, right? Something like that. So they're printing the money to make the difference, whereas in other countries they're just borrowing the money from, like, the ECB, in Europe, for instance. So my thing is, like, then it just causes more inflation, and you create a bigger debt ceiling until it gets unsustainable, to the point where the deficit is so big that you're printing so much, and then it causes hyperinflation.
I think we're kind of there, basically.
Yeah, it's crazy, man. It's crazy, but I think people don't really get the entire landscape of how the macroeconomic environment works. It's like I tell people all the time, I compare it to anatomy. It's like literally like the human body. If I mess up my back, well, that means I can't sit down. It sucks when I try to sleep, and then that affects my sleeping, and then it causes other issues, and then maybe I eventually have a bad posture, which makes other issues in the future. So one thing affects another. It's that's why, like, this whole interest rate hike thing makes no sense to me, because it's like, I mean, it's a temporary fix for a long-term problem, because they're eventually, okay, you break the economy, you put people out of business. People are humans, right, at the end of the day. So what you're essentially doing is they even admitted it, that they have to put people out of work for the system to continue, because that's what they're doing. They're increasing interest rates, which makes it more expensive to borrow to borrow debt. And if businesses can't borrow cheap debt, well, then that means they can't offset more on their taxes, from borrowing the cheap debt, and that means that they're going to have to cut expenses somehow, or increase the prices for goods and services. And so what essentially is going on is the government is increasing the interest rates. The people, then the businesses have a choice, whether they increase the prices for the good or service, or to lay off people, and they're choosing to lay off people, and they're breaking, actual homes and families, by doing this. And this whole system, the problem is the money, right? If you fix the money, you solve the problem. Fix the money. The money is the problem, because what we've all agreed upon uniformly, to trade as the medium of exchange for goods and services is money, right? Fiat, right? But fiat is literally, it's controlled by a few amount of people that decide when they want to increase or decrease the money supply, and we don't know when that is. There's no consistency. That's what I like about Bitcoin. The monetary policy can't be changed. It's just code. Like, we trust
That's
Google,
it.
So for me, it kills me and it blows my mind that people have uniformly agreed upon a monetary policy that's controlled by a few people that know, they're in the know, and they know when the monetary policy is going to change before we do. So then they prepare. You look at the Wall Street boys. It's not fun. And as a business, you have to decide and maneuver your entire business based off of what you think the monetary policy is going to be over the course of time. It's a difficult situation, man.
Okay.
Yeah.
Yeah, I mean, I completely agree. It's definitely a difficult situation to be in.
Yeah.
But I mean, Bitcoin's just crossed 30K just now. I just had a look at that.
Yeah.
So I don't know. That's the first time in quite
Since
a while.
2022. I think summer of 2022, I think was the last time it was at 30K.
I mean,
before it
let
crashed.
me have a look.
Yeah.
Let me have a look. So
Yeah.
Bitcoin.
I think it crashed after FTX last year, if I'm not mistaken, because it was at 30K, and then once the FTX thing happened.
So it was in May. The last time it was at this price.
Summer. Yeah. And then it crashed because of FTX. And the thing is, that's the thing that pisses me off too. It's like people try to tie FTX to crypto, and FTX is just a broker that facilitates crypto transactions. It's not a Web3 company, and I don't understand why they're going hand in hand.
To be honest with you, FTX was the biggest scam, Ponzi scheme, one of the biggest in crypto. And I think Sam is a very foolish man. He gave this persona that he was a good guy and wanting to help everybody, but in reality, I think he trusted the wrong people within his company, and he didn't have the guts or the balls to admit what was happening and to actually bring it forward. So. Yeah. What he did, he just kind of lost a lot of confidence, because what he also did, which people don't quite remember or don't quite understand, is that when everything was going down and people were depositing like specific tokens in his exchange, the tokens that they were depositing never actually existed.
Exactly.
He would just literally sell them on. He would just dump the whole tokens and to pump his FTX token. So all those tokens were lost.
Yeah.
And that's and to me that kind of, if he was meant to have so many Solana on his exchange and so many Bitcoin, none of that actually existed.
Yeah. No, that's the thing, but that's the game I think a lot of these exchanges are playing. Is you don't actually know. It's paper trading, and at the end of the day, because you don't actually know. It's the same with PayPal. Is I think you can buy Bitcoin on PayPal, and it's like, okay, but you can't take the Bitcoin off. So it's like, you guys are paper trading. At the end of the day,
Revolut does the same thing.
Yeah, Revolut does the same thing, but I think they did just recently add a feature, if I'm not mistaken, that you can take it off. No. But no, you still can't.
I don't know. I mean, Revolut are just they're not for me.
Yeah, you've told me like how they froze people's accounts and so on.
They just literally freeze your account for nothing.
Yeah, for no reason, man. It's
I mean, nuts. you've got $10 there, and they'll just freeze your account.
Yeah, it's crazy. But it's crazy. I was also looking at the news too. Like, I saw that Elon, he had the Dogecoin logo. I don't understand this whole thing with Dogecoin, man. I don't get it. Like, I want to, like, I get it because, okay, I get it and I don't get it, right? I get that tokenization of assets to build a community to then facilitate a product or service later is a new business model. I understand it. I get this aspect. But what I don't get is out of all the currencies that you could choose, which I don't consider Bitcoin cryptocurrency, because cryptocurrency for me is just actual companies that are using tokenization models to facilitate their product or service. Whereas Bitcoin is a neutral asset that no one controls. There's no CEO, there's no founder. They can't change the monetary policy. You need like a 70% or plus agreement amongst all the people who own stake and miners, right, to be able to do that, right? But with the other thing, it doesn't really make any sense to me, like with cryptocurrency. I think that with Dogecoin, for instance, Dogecoin for me is like and the inflation in Dogecoin, right? It's forever inflationary. So it's not a deflationary asset like Bitcoin. The inflation just keeps going up. I think around 5 billion every single year, right? If I'm not mistaken, of new Doge gets minted every single year. So I don't get like why you're choosing this thing that doesn't have a use case and isn't serving a real purpose as some kind of thing to troll the SEC or whatever. I think if you're gonna do something, make it legit. Put like Bitcoin or something. Maybe add Bitcoin payments for people to tip on Twitter, or introduce a Lightning network so people pay less in fees like they have in El Salvador.
I think Elon just wants to piss them off, to be honest. So that's it. But I mean, there was I read something that the SEC have a wallet that I'm not sure if it was Doge that they had a lot of, but they had a wallet that controlled a lot of crypto.
Oh, no. That was you might be talking about Coin Bureau, because he made an April Fool's joke.
Oh, was it?
Yeah, it was April Fool's. Yeah.
Oh, what an idiot.
Yeah. Yeah, he was trolling, man. Like, it was April
He
Fool's.
trolled me.
Yeah. If you got it's okay. Yeah, I
Anyway,
knew it
but
right away. I was like, come on, they're not holding Doge and the password isn't 1, 2, 3, 4, 5, whatever. Yeah.
I didn't read anything about password, but I definitely read they were holding Doge. I was like, that's strange.
No, it's not. It's the whole thing with Bitcoin, man. It's gonna go away eventually. I mean, it's not a real project. It's not real use case. It doesn't serve a real purpose. And I think a lot of these cryptos are gonna go away, but they're just projects, man. Like, I consider them like decentralized SaaS to an extent. They're just like software as a service, but just using a tokenization model to help community building and help make the incentivization model more efficient. That's what tokens do, right? Whether they're NFTs or through actual crypto tokens, right? But it's not Bitcoin, right? I mean, Bitcoin is it's a beast on its own. And I think people will stop to tie Bitcoin with all the madness of Web2 companies like FTX, or crypto companies that are doing DeFi. How is it DeFi if you can get shut down? It's not DeFi if you can get shut down. It's not DeFi if there's you're asking for KYC. That's not decentralized finance, right? So the idea that someone can come in and then go attack the CEO to fix the policy with the DeFi platform, like Uniswap has a CEO. That's not DeFi for me.
No.
It's not. If DeFi for me is putting an open source code on the internet and having anyone be able to transact, and only having it changed if there's a vote that people are able to change it, and removing yourself completely from the protocol, and probably autonomous completely.
I completely get that, but I think what they do is they kind of disperse their tokens amongst the community, and by doing that, they kind of say we're decentralized, so now we're DeFi. No, I think that's how it works. So if for instance I create a project and I've got like 1,000 tokens, and I disperse all of them amongst everybody who's used it, and I hold a small portion of those tokens, then that's what they consider DeFi.
And that's funny, because that's literally like unregistered security. That's literally all that is,
because they don't hold the majority of the tokens and they're all dispersed, they say, well, this, I can't do anything about it, so I have no control, so it's therefore not mine. It's a bit like having a company and having shares everywhere and you having virtually no shares. So you're saying kind of like it's the company of the people. So that's That's kind of what they're doing. That's why all these layer ones give incentives for people to take their tokens. So they'll create a treasury and then they'll disperse all their tokens amongst incentive programs. And what they're really doing is they're kind of lowering their stake within their own ecosphere.
Yeah. I mean, I get that, but based off of like how the US does it with the Howey test, the only true for me real form of a commodity is Bitcoin, because there was no pre-mine, and there's no CEO. And for me, that for me is a commodity, because anyone can, for instance, anyone can go get gold. Like if you have the money and you have the backing, you have the technological expertise, you can go find gold, on the ground, and you can dig it up and you can collect it for yourself, right? Anyone can do that. Same with Bitcoin, right? And that's what makes it a commodity. But whereas with these protocols, right? When you're launching something and you already have a stake in it, and you're not buying it afterwards, you're not having to show some kind of proof of work, because that's what gold is, right? You're showing some kind of proof of work to get the gold, and you're not showing any kind of proof of work, and you already have stake in the protocol. And then even if you leave it to the people, I think eventually it can transition probably to a commodity if you leave it eventually to the people. But it's like, if you already own the stake, this is where it gets like tricky, because I don't know how to really define it. If you launched it as basically unregistered security, and then you,
but isn't that what they all do? They all do it.
Yeah,
that's what they're all doing. They have a public sale, which is mostly illegal. They register it with a number of companies that are, again, surprise, surprise, based in some tax haven place.
Yeah.
And then eventually they have one entity send tokens to another entity within the country they want to operate. And then they call themselves regulated. And that's just how it works.
Yeah. And yeah.
So because there's a framework already in place to have these offshore companies and to have offshore companies interacting with places where regulation is happening in an unregulated manner, that's kind of what's happening here. They'll register a company, whether it's British Virgin Islands, Cayman Islands, somewhere like that, where there's no regulation. They'll do their token sale with that company, then they'll have a treasury, and then they'll gift the tokens to another company, which is somewhat the supporting company of the token. And then they'll use incentive programs to disperse the tokens to increase engagement.
Yes, exactly. That's the business model. But I have a question for you, man. What do you think about this whole? Do you think the whole idea of because here's my thing, man. I don't think the government really helps protect the people, right? Securities,
No.
So what is the purpose of having a Securities and Exchange Commission when they don't actually help the people? So are they really what they're doing? Yes, by law, it's illegal in some countries. It depends, right? Because if you're launching it in a country that doesn't abide by SEC regulation, then it's not illegal. But the problem, this is where it gets in that gray area, because you're able to facilitate that token to everyone around the world because of the technology. And
sure.
if that's the case, then what is the purpose then of there's no real need for the securities? I think that's why the Securities and Exchange Commission is kind of fighting this back, because they don't want people to be able to launch things without them being able to control and regulate them, because they don't have a job.
I mean, how many projects are being funded without their knowledge?
Yeah, for sure. There's thousands. There's thousands.
Are we talking 99.9% are funded without their knowledge?
Yeah.
And I think what they want to do is their mission is to protect the consumer. And I get that. But ultimately, I'm somewhat questioning myself and saying, is their mission to keep the poor poor and the rich richer? Because once you are an accredited investor, you're okay to invest in these speculative investments. But once you're not an accredited investor, in other words, your net worth is under $1 million.
Yes.
You're not. You're somehow too dumb.
Exactly.
And
And that's crazy.
I just think that's nonsense.
Me too. And this is why, like, and also, if you look at it, man, why is a stock market, open at a certain time, close at a certain time every day, and it's not open on the weekends? Whereas with the crypto market, it's completely liquid all the time, and everyone has access to it. So I just see like a shift happening where you go from the stock exchange to the block exchange, if you will. Because it just makes sense to tokenize things, and it makes everything more easier, it makes things more liquid, it moves things in economies more exponentially, because you don't have to wait for the market to open to get your money out, or to sell, or to buy, or you can just do it whenever you feel like it. And I think that's how it should be. Why do you have to wait a certain time to do things?
I don't know, man. I honestly, I think the people who set up the financial system early on, they had it this way. But I can't see it continuing for much longer.
Yeah, me neither. I mean, if you look at how it's set up and how people get the information before other people, and they know exactly when to buy and when to sell, that's an unfair advantage. Then you, like you said, you explained the accredited investor, right? Air quotations, the accredited investor, where you need $1 million in net worth to be able. That makes you now more of a suitable. Imagine, you gain all the way up to $1 million in net worth, and you're like, wait, I wasn't less intelligent yesterday than when I was at 900,000 in net worth than I am today at $1 million in net worth. So what's the difference? And it's just all about money, at the end of the day. And I agree. It just keeps the poor people poor. And it's unfortunate. But yeah, man.
Dude. I mean, who's to say that rich people don't make stupid bets?
Yeah, that's true. Of course, anyone that makes it to the level of 7, 8, 9 figs in net worth, they made a lot of stupid decisions and took a lot of risk and failed. It's impossible to go through that route, and just unless you were born into wealth, that's something completely different.
To be honest, I think that the whole idea of this accredited investor scheme, I think it's nonsense. I think anybody should be able to invest. I think, but at the same time, they should be told the risks. So,
yeah, exactly. And honestly, my opinion is you should research the risk yourself, but you should also not be able to not have access to the information. But everyone has access now because of the internet. But at the end of the day, it's your responsibility. If you deploy capital into something, if I deploy capital into a drink and then it ends up being a shitty drink, well, that's my fault. That's a risk that I took, right?
Mm-hmm. That's it. I mean, you can invest in all sorts of things, and if you lose money, that's down to you. But I think, I don't know. I mean, on the end of the day, the SEC, they do what they do. I don't know why they were set up. They were set up to protect people. So,
yeah,
it is what it is.
So was the government, but yeah. I think we'll leave on that note. We just hit our 1 hour mark, man. Let's leave on this note, man, and let's do this again next week or sometime, man.
Yeah, sure. Yeah, it's a sunny day today, so I better enjoy the rest of the day.
Yeah, me too. I'm about to go out now and go meet the videographer and whatnot. But all right, guys. So this concludes this episode of the Mooncast, man, and peace.